forever, and I just didn't feel like. All right, sorry about that. I was totally lazy about it, but hey, I mean, you can't keep on updating a video for the course of a few months, right? Anyway, euro against the New Zealand dollar for the monthly time frame. By the way, I took the trade right there. This is the inverted hammer that gave me the sell signal. In fact, my entry was right there, right below the low of that hammer. Okay, my stop loss was 50% above that, immediately above the 50% range of this candle, okay, which was somewhere around there. That was my stop loss. And well, I wrote this trade for the next 2 candles. Okay, that was my entry, that was my stop loss, etc., etc. Don't you worry, I'm going to mark all the levels for you. First of all, I would like to show you though the actual levels of support and resistance that, well, kind of shaped up the the setup for this trade. Okay, I will start off by drawing trend lines. Firstly, since we are in a downtrend, I am obviously to mark a downtrend line, right? And I do so by getting the very beginning of the move with this price swing up, that price swing top, and that obviously gives me the opportunity to draw a trend line right there. Okay, right there. As long as that trend line is in place, and as long as price remains under that trend line, it will certainly work as resistance, just as it's working right now as I record this video, right? Moreover, what do we have here? We have this triple level of support. Okay, right there, triple level. In fact, let me actually use a proper horizontal trend line. Here we are, support, support once again, but eventually the down pressure was too strong, and finally price gave way with this beautiful red long candle. Okay, do you see that beautiful candle there? Perhaps I may want to zoom in a little bit more. There we are. This candle this is the candle I'm talking about, breaking through that former level of triple support. As I always say, always try to analyze actual breakout candles, because that's usually a very good indication of whether a breakout is valid, okay, it's solid, it's pushed in high trading volume or not, all right? Since this was a very long red candle, okay, with full body, very long body, and hardly any wicks either to the upside or to the downside, that gave me the clue that price was to continue to the downside, and therefore that I was to continue searching for short opportunities in the direction of the downtrend, right? Now, please note how this is a fake breakout, all right? There is another video elsewhere on the site where I explain all about the fake breakout strategy, all right? It's basically based on inverted hammers, or hammers as a whole. This specific candle there is an inverted hammer that's actually giving us a fake breakout setup. Do you see how price, or rather how this candle breaches through this trend line, this level of resistance, all right, probably triggering a number of stop losses on its way up. Okay, everybody, all the traders who were riding short this trend line or this trend as a whole, chances are that they were trailing their stop loss just above the actual trend line, right? That's a very common stop loss practice, and whenever that happens, the market it's not really that strange to see the market giving you a fake breakout, triggering all those stop losses immediately after price reversing around and closing below that resistance level. All right, so effectively this becomes a fake breakout, and as a general rule of the thumb, what you usually see immediately after is a counter move in the opposite direction, just as, by the way, we saw here. All right, that's going to be a fake breakout, as you will soon see, and as a result, after this inverted hammer proved to be a fake breakout, price immediately gave us 2 or 3 nice candles in the opposite direction. Okay, fake breakout formation, as you will soon see. Very nice down move, plenty, or certainly, suitable enough to get some short profits, some profits to the downside. Same phenomenon there, another fake breakout candle formation, another 2 or 3 nice candles to the downside, certainly long enough to squeeze some profits also to the downside. Okay, now why do I say that this is a fake breakout candle? Well, let me show you why, guys. We've already seen this one, this line. I'm gonna remove it just to make sure that my charts remain clean. So this before this downtrend came in place, we were seeing price printing higher swing lows, higher swing highs, and therefore we had a support outer trend line there. Okay, that trend line there. So the downward pressure, as I mentioned before, was too strong for any particular support level to hold price above, and therefore eventually we saw a breakout to the downside. Typical pullback, okay? Breakout, pullback, continuation pattern. Do you guys see that? Down move from there. Perhaps someone nimble enough could have zoomed into the shorter time frames in there and make some very nice trade to the downside of the weekly, perhaps of the daily time frame. Okay, as you guys know, I always recommend to draw these levels of support and resistance in the longer time frames and then drill down into the shorter time frames to see if you get any reaction here. Obviously a reaction to the downside, and from there search for trading opportunities in the shorter time frames in the direction of this long-term reaction. Okay, anyway, so breakout, pullback, continuation pattern. There was another level of strong support in there, which kind of hold price temporary. Once again, price saw another rally, and let me clean up this trend line, since at this moment that trend line was not yet there. All right, so what we had at that moment was just these two levels. Okay, just so you guys can rewind back in time and see what my eyes were seeing back then. Breakout, support, pullback, continuation, support again, and price retested this trend line once again. Right there is the fake breakout. On that second retest of this trend line from below, price gave us a fake breakout hammer, and again, all the people who were shorting this move had probably placed their stop loss above that breakout, pullback, continuation pattern. You see that? Or, you know the typical